The trading industry is full of a lot of strategies, a lot of concepts, and a lot of ideas on how to trade the market. But then I see less people talking about one of the most effective trading strategy that has been proven over and over again, known as the LTA plus zone trading strategy. So what exactly is this strategy? This is actually a price action strategy, so it's not really complicated. It's one of the most easiest strategy to understand. And as forex trading should be, forex trading should be something easy for everyone to understand and easily implement, because any strategy that is complicated doesn't really worth their time and effort. And that's one thing I love about trading key levels plus LTAs. So now for those of you who don't know what LTA actually stands for, LTA stands for low traffic areas. So these low traffic areas are areas whereby the market has moved from recently and likely to come back to due to the big space left behind by the market, that a lot of money is still standing out. So in this video, I'm going to break down to you what exactly LTAs mean, how you can identify them in the market, and how you can actually add up key levels into trading them. So hello guys, now I have my computer. I'm going to show you everything you need to know about low traffic areas in the market, also known as LTAs. So now before we get started, let me show you what a typical LTA look like in the market. So for example, you have a market moving in this direction, market move upward, came down, gave you this sort of movement. Now with the market moving like this, we have what we call LTA, and what we call the LTA in this point is this area here. This area below here is what we call the LTA. Why is it called LTA? The reason why it's called an LTA is simply because the market moved from it with a very high momentum with no any form of power obstructing it. So now the difference between an LTA and a normal market is this. A normal market, when it's moving to a direction, it goes up, probably pull back a little bit, comes, pull back, then it approaches the top side in this manner. But then an LTA doesn't have a lot of these pullbacks. Even if it has pullback, it doesn't have more than 2 pullback in a very high momentum or 3 pullback in a very high movement way. So a clear low traffic area is in this form, which is the first one that I drew for you, that the market moved in one positive direction with a very high momentum with no opposing power in it. So now we'll talk about LTAs. LTAs don't only move bullish alone. We also have LTAs that are moving towards the sell direction. But in most cases, most of the LTAs often happens when the market is pushing to the upside. So now this is simply what an LTA means. Let me show you an LTA using candles. So for example, let's say we have an uptrend here. We have candle 1 here. We have candle 2. Then I'm just going to clone this. And then we have candle 3. You see, this sort of market movement is called an LTA. The reason it's called an LTA is simply because the market moves straight forward with no single interruption. Now, these areas here, from this top to this lower area here, is what is called the LTA, low traffic area, simply an area whereby there is no power obstruction. But in the case whereby once this market was moving upward, it created some pullback. Probably after moving here, it pulled back to this area before the next continue. Then all those several pullback is no longer considered an LTA. So now let me show you a typical LTA using the market itself. Let me remove all drawings. Now here is a pair between Australian dollar and Canadian dollar. So now if you look at this market right now, we cannot call this area here. You see this area here, we cannot call it an LTA. Why can't we call it an LTA? Because when the market was moving from this top side to the down, you can look, if you look at it carefully, the market came here, pull back, came here, pull back, came here, took a look. So with this sort of movement, we cannot call it an LTA. But then we have a kind of market we can call an LTA here. It's simply here. If you look at this area here, let me get my path drawer to show you that. But then this sort of movement is called an LTA. If you look at this market right now, from this top level to this down here is an LTA area. Why is it called an LTA area? Because the market moved from the top to the down with very high momentum. And if you look at it carefully, before the market made this move, it created another LTA over here. You can see the market went from this down to this top with clean candles around it, no much obstruction. The market moved straight ahead. And you see, when it was coming back to take out that LTA area, it did it with a different clean candle as well. So let's assume you were a trader who trade LTAs, and then you saw this bullish momentum to the top side. No one has to tell you that when the market gets to this top key level, it's definitely going to fall downwards. Because what? Number one, the market was at a key level here. And secondly, there was an LTA pushing the market upward, known as low traffic area, pushing the market upward. So now that you've gotten the idea of what LTAs means and what are not LTAs, let me show you how you can actually spot LTAs in the market. So when it comes to looking for LTAs, let me just remove drawings. We look at this market right now. This is Australian dollar and Canadian dollar on the daily time frame. If you look at this market right now on the daily time frame, what do you see? You see that we have an area of LTA here. You can see from this place downwards is clean candles. You can see it over here. These are pure clean candles on the daily time frame. And these candles you see here, 3 of these candles simply represent 3 days. And what this is telling you that in a period of 3 consecutive days, there was a consistent bullish momentum towards the upside with low bearish obstruction. This will now create a perfect LTA position for you. So now let's take a look at another one here again. You can see here was another area of LTA as well in the market. Let me show you. Let me just grab this and show you. You can see here was another LTA movement in the market again, where the market moved from the lower, from bottom straight to the upside with very high momentum. And with here now, if you are someone who trade LTAs, the market breaking below this support area would have given you a perfect entry to enter the market from this point and then get out at the end of this LTA. So now this is simply what LTAs mean. They are simply areas of clean candles whereby the market moves to a particular direction with high momentum. So now let me show you how you can actually trade LTAs profitably. So now when it comes to trading LTAs profitably, the first thing is identifying an LTA. And when it comes to identifying an LTA, I will always advise you look for it on the daily time frame. So why should I say you should look for it on the daily time frame? The reason why I need to look for it on the daily time frame is that if you're able to spot areas of clean candles on the daily time frame, it simply means one thing. It simply means that the market has given you a good movement and has created a lot of space that you can actually trade on the lower time frame. And when you spot this high momentum on the daily time frame, the next thing you need to look out for is that look out for a little bit of opposing momentum when the market got to the highest point. So for example, when the market got to this top now, what do you notice? So now, after identifying LTAs, now the next thing is simply doing your analytics to trade LTAs. So the reason why I need to do analytics before placing LTAs simply means you see clean candles doesn't mean the market will always come to it. The market might decide not to come to it and then move straight to the opposite direction. So for you to be able to trade it, you need to do your own analytics depending on the strategy you trade. So I'm a pure price action trader, so I'm going to do price action top-down analytics right now to identify areas where I can come into the market and areas I can get out of. And in case you don't know what top-down analytics means, then you can watch the video flashing on your screen right now to actually learn more about top-down analytics, because it's really going to help you grow as a trader. Because with top-down analytics, you easily get more better and more high-quality trading opportunities than trading blindly. So now from the daily time frame, we have to identify our key areas. So here's my zone number 1, known as a support area 1. And then I'll have this supply area as well. So I'll call this area an area of supply. This point here. So I normally don't consider the wicks. I'll have to be honest with you. When I'm marking my areas, I don't consider the wicks. And then we've identified this on the daily time frame. And then we also need to get our resistance area. So this is the overall resistance area on the daily time frame. So why are we marking this area? The reason why we are marking this area is that you spot an LTA doesn't mean you trade it from the middle of nowhere. You have to trade it from an area of value in order to get what you need from the market. So always look out for areas of values before trading LTAs. And now the next thing we have to do after identifying this on the daily time frame is that I'm going to go down to the 4-hour time frame. So on the 4-hour time frame, I want to look at another key level in the market. And on the 4-hour time frame, we'll have this one here. So I'm just going to name this one 4-hour key zone. So the reason I call it 4-hour key zone is that you can see that the last time the market got to this particular point, you can see the high bearish momentum that pushed it downwards. This simply means that there's still a possibility that once the market comes here, it might still fall downwards, even though we are not really 100% sure about it. Because in trading, nothing is 100% proof. Now, the next thing we have to do from here is simply look at the recent high as well. And this is the recent highest point in the market. I'm still going to get it out. Now, after identifying this, we've identified our LTA area. And here is the LTA area that we want to grab. You can see it here, areas of empty candle that we want to grab. We've identified it. Now we've identified the key areas in the market as well that we can see. So now, after identifying it like this, we won't rush into the market, because from where the market is right now, it can decide to pick from here. Let me get my path drawer. The market can decide to pick from here to the upside, and also can decide to move from the upside to the downside. So now what we are going to do before we enter this market is that first of all, we are going to identify this area of no value, but we see it as an area of value. The nearest swing low in the market, which is this one here, we'll have to wait for the market to actually break below this particular candle before we get in. So now, why do we want the market to break below this candle first? On the 4-hour that we are right now, this is the lowest place in the market, and the reason I need the market to break below it is that if the market can take out this swing low, it simply means that the area of LTA is 100%, is 80% short for us to trade, and there's a possibility that we're going to make a decent profit from it. And on the other hand, if this is not possible, then we can look forward to continue trading the uptrend that the market has decided. But first, I'll still go over to the 1 hour to see if there's any form of structure being created on the 1 hour. So on the 1 hour, we can see that there's no structure being created, but the market is still ranging around here and nothing else. So now, with this in mind, I'm only going to get into this trade with the 4 hour, because on the 4 hour, I had more clear value of the market, because on the 1 hour, we can see that the market is still creating newer swing lows at the top, which we really don't want to trade, because those ones at the top here might not really be strong. But this one, the 4 hour, if the market is able to break below it, it simply means that there's a lot of strength in it. So now with this, now I'm going to set my entry probably below here. My take profit, since the area of LTA is really wide, I'm going to put my take profit here. And then my stop loss here, I'll take it to this other place here. So now let's see what we are actually risking in this market. So we'll have this. That's probably, let me get it up together. We are not sure the market will get to the extreme low here, but we'll still have to mark it out for future reasons. So this 80 pips, 87 pips. And then let's look at our stop loss position as well. Our stop loss position is about 34 pips, which is not bad. Risking 34 pips on 4-hour time frame is pretty much good. So now let's see if our trade gets triggered. I'm just going to increase the time right now to see what happens. So you can see the market has filled our trade. However, if you notice, the market did not get to our main take profit position. However, from where the market got to, we can see that we had a decent this thing here. As we had a decent 71 pips from where the market ended. And if we look at where the market ended, it was actually an area of key value as well, which is this point here. You can see the last time the market got here, you can see the bullish momentum that came into the market immediately. So with this now, at this 71 pips, it's a good opportunity for you to get out. Or even if you don't get out here, on this pullback here, let me say, if you didn't get out here from here to here, then when this market made this pullback and they fell back to here, you could have still gotten out, seeing this bullish momentum that the market has added. So with this already said, you see how the LTA system is. It's not a strategy that will win you 100% of the time, but there's more chances of you winning more trade with it, provided that you follow it correctly. So now with this, let's see where the market actually head to next. You can see even with this, the market did not get to your stop loss. You see fall back in again. Why did the market fall back in? If you look at what the market did here, let me cut it out for you. If you look at it, when the market went upward, it created what again? It created another LTA here. You can see this was under LTA created by the market. So this was under LTA created by the market. Meaning when this LTA was created, as an LTA trader, you'll definitely be looking for another trading opportunity again when the bearish momentum came in. You see another LTA, and then another one to the upside again. You can see every single LTA is getting taken out. Let me mark out the other LTA here for you. Let me cut it off. You can see we had another LTA here, which is this big candle you are seeing here. You can see this big bearish candle is another area of LTA. You see it here? It's another LTA. Why? Because it was a single bearish candle that pushed directly downwards, which simply means that the market will still cover it up. And let's see how many pips that candle alone created. That candle alone was 44 pips. Meaning if I should enter this trade right now with maybe $100 risk for it, if I'm risking $100, meaning I would have gotten a 44 pips. And if I'm using a standard lot size whereby 1 pip stand for $1, that is simply 1 pip stand for $10, that is simply 440 something pips, 440 something dollar in the bag. You see how it is. When you identify these areas of LTAs, you wait for confirmation and then you grab them immediately. You see them. So now let's see what the market do if it creates another one again. So you see, even if you had had this trade for the longest while before, you will still get to your take profit. But personally, me, I don't hold my trade for this long. Let's see how many days. 19 days. Nah. The highest I hold my trade is 3 days. Let me see how many days it took to get to this point. It took 4 days. So meaning I would have gotten out on the way when it was 3 days already. So highest I hold my trade is simply 3 days. Anything above 3 days, I always get out of the market. The reason is that the longer you hold a trade, the more news that might come in, and the more news that come in, the more events that come in, it creates more opportunity to increase the spread and other things that might go against your trading decision. So that's simply all I have for you in this video about trading LTAs. It was really simple. You identify an LTA, you look for an area where the market is ranging, and then you wait for the market to break out of the range. Then you simply get in from that point with a decent stop loss position. Now, apart from that, you don't only identify LTAs in this sort of market. As I showed you here, you can get LTAs both in the bull and bear market. You can see when the market was coming downwards, it created an LTA, and you see the market still went back to grab the LTA again. You can see it still came back for it. So you could have also grabbed this particular few pips that you secured here. So with that said, I hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. So in case you don't know how you can draw your zones and everything, go watch that my video on top down analytics. It will teach you everything you need to know to draw the right zones to trade from. So have a nice day. Bye.